Studios, the Ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB on this Monday, the 11th of March. I'm Daniela Couillet and I am here along with me, myself and I today. So you'll just have to bear with me. Now let's have a quick look at the market, which I have to say, it was not a happy Monday when it came to the CIBO 200. It is closed out at down around 27 points or around 1.83%. And that also includes the ASX, which is also 142 points lower or about 1.8% to 7,704. And just in terms of perspective, it is now the ASX 200 lost about 0.5% for the last 5 days and sits about 1.89% below its 52-week high. So a bit of a sad-faced day. So let's have a look at the three themes of what we're looking at today. And I thought the Ides of March, maybe that is appropriate saying, Ate Brute, in terms of Julius Caesar losing his life. Now, hopefully we're not going to go to those depths of despair, but obviously a lot of commentators are starting to question whether or not these markets continue to rally as much as they have. So possibly it is a buyer beware or faites attention for the Ides of March. Now, resources sector. Well, resources are weighing very much on the markets today. So big selling in our big miners, and because they do represent such a large proportion along with financials in terms of the ASX index, when you combine resources and financials, it's almost 50% of the index. So we have seen those big miners weighing on our index. Now, slim pickings in terms of trying to find green on screen, but also slim pickings in terms of volumes today. So just be aware, even though we had a weak lead from Wall Street overnight, it wasn't as weak as how our markets have played out today. But there are quite a number of Australian states that are on holidays, so slim pickings when it comes to the actual volumes. And of course, volumes when they are thin tends to exacerbate any selling pressure. Now, as I mentioned, let's move on to some of those sectors and have a look at the mining stocks today, because big selling across the board, particularly in the likes of Rio Tinto and Fortescue, off well over 3% today, which would have been a very, very big drag on our market. Ditto, we've seen heavy selling going on in the energy sector, pretty much across the board. Beach Energy, Ampol and Viva Energy all off by over 2%. Again, weighing on the market. And then just having a look at our other big energy stocks, the likes of Woodside off by about 2.7%. Even the likes of Boss Energy, so the uranium play off by 3%, Karoon 3.4%, and Paladin, the only one really putting in a reasonable performance, down by 0.4%. Financials. Interesting to note that Matt Common of Commonwealth Bank came out today at a conference saying that a major or a US pension fund has actually been buying Commonwealth Bank shares, and there's been some big domestic buying. Nevertheless, we saw these financial institutions rallying strongly on Friday afternoon session, and today the profit taking moving in. So Commonwealth Bank off by around 2.4%, Westpac off by 3%, NAB about 2.6%, and Macquarie and ANZ relatively outperforming, off by around 1.1% and 1.9% respectively. And I just wanted to touch on the technology stocks because we have seen Nvidia roll over on Friday's trade. And what I thought was really interesting today was our technology stocks, despite the weak lead from Wall Street, have actually performed pretty well. We have Altium, obviously subject to the takeover bid, that was green on screen, but also Xero finding some love. WiseTech and the likes of NextDC and Technology One down ever so slightly, so bucking the international trend. If we turn onto the next page, we can see Life 360, which has been re-rated recently, off by about 1.5%, Megaport off by around 2%, as was Dicker Data, and Iress up by almost 3%. Okay, time for some of the top stories today. And oil and gas giant Shell has awarded ASX, a listed engineering professional services firm, Worley, a contract to build a renewable hydrogen facility in the port of Rotterdam in the Netherlands. And once operational, this facility is expected to produce approximately 60,000 kilograms of renewable hydrogen per day. Looking at software company Task shares, which were up over 90% today, and the reason why: they've entered into a scheme implementation agreement with US firm PAR Technology to acquire the company. And Regional Express shares rallied about 1.9% after it announced a code-sharing partnership with Etihad Airways. Okay, now it's time to go to our COB guest of Mondays, and Josh Gilbert from eToro joins me now. Josh, thank you so much for joining me, myself and I today on the COB.
My pleasure.
Gosh, it was a bit grim. Do you think it was a case of everybody, if there were any sellers out there, everybody else was on holidays, so they just kept on hitting the sell button and no one was on the other side?
Yeah, it felt a bit like that, didn't it? Yeah, grim, I think, is a good word to describe it. We pretty much wiped out all of last week's good gains in one day. And it does feel like when you get those sort of corrections, when you get those sell-offs, they always do hit you a little bit harder than when you have those sort of green days as well. And we certainly got that today. Obviously, we had that weak lead from Wall Street, as you sort of alluded to. And then obviously iron ore really on the sort of the back foot. Materials, obviously the biggest sort of loser, per sectors on the ASX today. And then when you've got obviously those big names, Rio Tinto, BHP, down by, those sort of 3% numbers, it's always going to be sort of a huge drag on markets. And that is really coming from that, that failure from China to sort of really generate much in the way of excitement to sort of get investors feeling a little bit more positive. Obviously, their sort of GDP number last week, sort of keeping that 5% was what I think most were sort of expecting. But other than that, I think last week was a bit lackluster for China, and we've sort of really still not seen their market, or anything connected such as iron ore really had any sort of tailwind at all. So yeah, that's dragged onto the local market today and sort of really put us under pressure.
Yeah. Now, Josh, the sell-off or the turnaround in Nvidia on Friday, I think it rocketed to an all-time high before the sellers moved in. Is this just, do you think, a one-day technical, blip in the horizon, or is it all over Red Rover now for the stock that was not only the momentum trade, it was the mega trend trade, and it was the earnings upgrade trade? Is it all going to go pear-shaped from here?
I don't think so. Look, I think when you've got a business such as Nvidia that is continuing to grow in the capacity that it is, what it has delivered over the last sort of few years, I think it's on track to sort of continue to sort of deliver. Just looking today, cash flow this year was up by 600%. Earnings were up by sort of 500% within the last 12 months. But the good thing is that is going to sort of continue. Yes, we could argue that the valuations have got sort of slightly stretched. The sort of the run rate that we're seeing from indexes on an annualized basis is probably not sustainable for the full year. Got the S&P 500 running at a 40% annualized gain. We're not going to see that. Let's be frank. So we are going to see this sort of a slowdown. Unfortunately, Nvidia is probably going to be the name that's at the front of that list if investors do want to sort of take a little bit of profit off the table, given how far we've really come. So I still think that trade, still has legs. But again, if we're talking about it sort of, going up another 100%, really that looks a little bit far-fetched given, the size that business would sort of have to get to. But in terms of that sort of AI train, I don't think it's slowing down. I still think it will be what investors look to. When we speak to investors, that is still sort of the theme that is front of mind for them at the moment. They're not just looking at Nvidia, they're looking at sort of what can be underneath as well, that there's sort of picks and shovels in AI. But that is really where much of the enthusiasm is coming for investors at the moment, is still on AI.
Is it a case of people wanting to potentially take some risk off the table as we go into that all-important CPI print Tuesday time in the US?
Yeah, look, I think, like I said then, I think it's a bit of a healthy sort of correction, a bit of a healthy pullback. I wouldn't even say it was sort of a correction, what we're seeing from the US. I do think we'll get a little bit of weakness from sort of US markets this week. Obviously, US inflation is that number really that I think either helps drive this rally further or it sort of puts the brakes firmly on. I think core inflation is expected to pick up slightly to 3.9%. Headlines expected to sort of stay at 3.1%. But it's still the most important number in markets. That's how we see it. It's still going to be what sort of dictates the Fed. It's still going to be what dictates how early we get these rate cuts. If we have a number that's stronger than what's the market's expecting, then that sort of June expectation is obviously going to be sort of pushed back. And that's when I think we would then start to see, quite a bit of aggressive profit taking. So a lot is riding on that inflation number this week. That's where I think we can sort of trip up on this sort of rally. But for us, we do see that all-time highs beget all-time highs. So, we've seen 15 new all-time highs from the S&P 500 already this year. So what we're sort of seeing is that unless the fundamentals ultimately change, which we don't think they are at the moment, then this rally does have a little bit further to go as we see it. But inflation is the hurdle, and obviously a bit of a tech stumble is also something that investors have got to keep an eye out for as well.
Yeah, investors have been really happy to be buying all the dips for quite a while, so it will be interesting to see whether they step back in again. Can Bitcoin and Ether and maybe even some of those meme coins, and I can't help but giggle because we've got a couple of Shibu Inus in our neighbourhood, are they going to be able to hold up in the face of a correction if we do see, or a sell-off, ongoing sell-off in the equity markets?
So I think what we've seen over the last sort of 3 months really to start this year is that we've started to see crypto maybe slightly disconnect slightly from macro in sort of some sense. It's very much being driven by sort of some of the other catalysts outside of macro, such as the halving, such as these ETFs that are driving huge demand, and obviously we're seeing that supply sort of squeeze. So I think those are sort of really the fundamentals. I do think though, if we have a much bigger than expected inflation print, if we do sort of get that pushback from the Fed over the next couple of weeks, regarding rate cuts, I do think that does put crypto on the back foot slightly. But as I say, I think we've got some other fundamentals outside of macro that is really driving crypto assets at the moment. I think the halving is, really that key catalyst that we're looking towards. As we head into the halving, I think we're going to see, prices continue to rally. Around sort of April time is where we sort of view that we might see prices start to cool a little bit as we get that sort of sell the news type of event. But beforehand, I think we're really going to see this continue to sort of drive higher. These assets have so much momentum at the moment. There's so much positivity behind, institutional investors buying this asset, like they've never done before. So we see that this can continue even if we do get a bit of weakness in equity markets.
Fantastic, Josh. As always, thank you so much for joining the COB.
Thanks, Danny. Have a great week.
Thank you. Now, Josh Gilbert there from eToro. Now, let's turn to the stock of the day, which was a deep yellow, ticker code DYL. And our call guests were Mayfin Samasundaram from Deep Data Analytics and Henry Jennings from Marcus Today.
Retail shareholder, there's going to be pressure on it again because the $30 million share placement, the SPP rather. So this is going to take a while to work through the company, to be honest. I have to say it's probably killed the share price in this one till at least May, I would say. So here we are in March. So I wouldn't imagine, unless something dramatic happens in the uranium price, we're going to see an awful lot of appreciation here. In fact, I would suggest that we are going to see this one head lower over time, because there's just indigestion, and when the stock and the sector gets unsexy, which it does appear to be at the moment, then we do see that indigestion weighing. And I think, the underwriters, the guys there would be praying and hoping that the uranium price perks up, because $1.22.5 is not a very easy line in the sand to defend. I wouldn't be surprised if this one back down to $1.
And I have to agree with Henry on what the management has done. I always find it funny how everyone thinks corporates doing takeovers and capital raisings, they've got great timing. They're the worst timers in the market. They're worse than brokers, and brokers are bad. So in that context, why didn't they raise when it was flying and the commodity was in favor? Easy to say afterwards, I suppose. But we all knew they were going to raise. But it's one of those things when it's a commodity mining stock about to build a project, you don't want to be there when they're building it.
So not a lot of enthusiasm there for deep yellow from our experts guests on the call today. Now, our annual subscriber survey is open until March the 13th. And we'd really love it if you could take a few minutes and fill it out so we can make ausbiz better for you. To sweeten the deal, someone is going to win a managed investment portfolio from MPC Markets worth $5,000. And there are other prizes too. So just go to ausbiz.co/survey24. Now it's time to check in with some of the leaders and the laggards in today's trade. And there was green on screen, maybe not a lot of it, but it was there. Block leading the charge, up 3.4%. Iress almost 3%, as was Corporate Travel, with Dexus and Net Wealth also up by over 1%. And some of the laggards today was Coronado Global Resources. Just bear in mind, going ex-dividend, off by 5.5%. Bellevue Gold also off by 5%, as was Champion Iron Ore, Arcadium Lithium and Chalice Mining. So the mining stocks really under pressure today. Now, in terms of some of the small caps, Task, we mentioned that earlier, the takeover there, up over 90%, Eureka up 24%, 88 Energy 9%, and Catalyst Metals almost 9%. Some of the small cap laggards, and Cocal was down about 11%, Tamboran 10%, Santa Barbara off by around 9.7%, 9.5% sell-off for Aspire, and Anson Resources off by 9% as well. So grim and grisly. Now, in terms of what's coming up tomorrow, because very quiet overnight, but tomorrow we've got the NAB Business Confidence for February, Westpac Consumer Confidence for March, Value of Dwellings for Australia, and the RBA Assistant Governor on a panel. Now, the continuation of stocks going ex-dividend, that will be IGO and also NWS and LIC. So quite a few still coming through. Okay, well, that pretty much does it for the COB today. I'll just have one final check on the ASX. There we go, the CBO 200 down by 27 points or 1.8%, and the ASX 200, just having a look at that one, also off by 1.8% or 142 points to 7,704. And a quick check just on the little Aussie battler, because that's usually some indication of a risk on versus a risk off, and it too is under some selling pressure, currently off at around by about 0.24% to around 66.11 against the US dollar. Well, that's it for today, and if you've been on holidays, I hope you had a nice day. Do catch up with some of our interviews that were on the ausbiz website. Otherwise, have a great evening, and we will catch you all live tomorrow morning at 9:40 a.m.